We recently asked our audience on Facebook, what do they want to know about buying a property for the first time? Here are their questions answered. My name's Gindi, I'm one of the senior advisors at Create Finance. Let's get into the video. The first question asked is by Sally from Durham. Sally asks, how does the mortgage process work? Well, Sally, you want to try and involve your mortgage broker as early as possible and before you start viewing properties. Essentially, they will carry out an affordability check on you and they may decide to do a credit check thereafter. You can then ascertain how much you can borrow towards your mortgage and what your monthly payments would be. Once your offer's been accepted, that's when the mortgage broker would process your full mortgage application. The lender will then carry out a survey on the property and then, if everything's satisfactory, they'll issue the formal mortgage offer. Once the mortgage offer has been issued, the solicitor will then wrap up and do their legal work, and then you'll get the keys for the property. So engage with the mortgage broker before you start viewing properties, and they will guide you through the process. Question number 2. Anna from Herefordshire asks, what are the different types of mortgages? Well, Anna, two common types of mortgages are your fixed and variable rate mortgages. Your fixed rate mortgages is essentially your fixed payment over a durational period. This allows you to budget on a monthly basis and tends to be the most typical and common mortgage type for first-time buyers. Your second one is your tracker or your variable rate mortgages. This effectively can go up and down in line with either the Bank of England base rate or the lender's standard variable rate. Because you can have some volatility within that, it doesn't allow you to budget on a monthly basis as your payments may increase. So essentially there's two types of mortgages, fixed rate or your variable rate mortgages. Question number 3 is from Paige from Hull. Paige from Hull asks, what schemes are available for me? Now Paige, this is market dependent. So as of today, 2024, there are shared ownership schemes, which effectively means that you can actually buy a property with zero deposit, as well as a deposit unlock scheme, and that's buying a new build property with a 5% deposit. So just to summarize, shared ownership schemes and deposit unlock schemes are two of the most common schemes available today. Question number 4, Mason from Cornwall asks, how do I calculate how much you can borrow? Mason, two ways of doing this. There are mortgage calculators available on the web. You can key in your income and any credit commitments and it'll give you a rough figure of what you could borrow. Or you can engage with a mortgage broker. The mortgage broker will carry out a full affordability assessment with you. This tends to be more accurate than an affordability calculator. So two ways of doing this, a mortgage affordability calculator online or engaging with a mortgage broker. Question number 5 comes from Brandon in Manchester. Brandon asks, how do I know if I can afford the mortgage? Brandon, this is one of the reasons it's important to engage with a mortgage broker. What they will do is carry out an affordability assessment. Once they've given you a figure of what you can borrow, you can then match it to the mortgage rates available to you currently. You can then decide if that mortgage payment is affordable to you. If not, the mortgage broker would help tell you what is an affordable amount for you to borrow. So you may need to drop down your purchase price so you can effectively afford to live in that property. So Brandon, speak to a mortgage broker and they can tell you what your current mortgage payments will be based on the purchase price you're looking at. Question number 6 comes from Rebecca in Leicester. Rebecca asks, do I need to survey the property? Rebecca, your home will be the most expensive thing you'll ever buy. It's very important that you have a survey done on that property. By having a thorough survey done on that property will help identify any defects contained within that. This could potentially save you thousands and thousands of pounds. So Rebecca, answer to the question is, yes, I would have a survey on the property. I'd recommend having a level 2 home buyer's report. Question number 7 comes from John in Perry Bar. John asks, is my credit report an important factor? John, the answer to the question is, yes, it very much is. The lender would either credit search you or credit score you as part of the decisioning process. Any adverse credit identified on your credit report could harm your chances of getting a mortgage. If there is adverse credit such as defaults, late payments or a CCJ identified on your credit report, this could limit your chances of getting a mortgage, or the interest rate or the deposit that you may have to put down for your purchase may be higher. So John, your credit report is an important factor. Any adverse credit contained within your credit report could harm your chances of getting a mortgage. And finally, Lucy from Wolverhampton asks, is it worth getting a mortgage broker? Lucy, answer to the question is, I would say very much so. A good mortgage broker can identify the specialist home buying schemes available to you. They will have access to a lot more products than your bank can offer. Also, they'll have access to potentially lower interest rates available than just going to your bank. So Lucy, there's loads of benefits of having a mortgage broker arrange your first mortgage. So I would say it is important for you to find a broker. So there you go, some first time buyer questions answered for you. If you have any further questions, please drop us a comment below and also check out our other videos.